Good morning, traders. It is 8:03 a.m. Chicago time on Monday, the 9th of April, 2018. Thanks for joining me again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market currently is holding prices higher, allocating slightly to risk. The S&P minis did not even touch yesterday's close or Friday's close. Overnight inventories 100% long. Gold is slightly up, teetering on unchanged. It's up 60 cents or 50 cents. But seeing across the board that the safety assets are lower and equities are a little bit higher, except for the British pound and the euro. The leader this morning's crude, trading at 62.64 on the May contract, up 60 cents or almost 1%. So we're trading inside of Friday's range, and after the drop on Friday, and we're holding steady inside of what looks like a balanced overnight session, a quiet overnight session. Let's take a look at what's on deck for today, but also for the week. The week has releases dispersed over several days. Today's pretty clear. There's nothing there that is likely to impact us in our session, but going forward, we do have numbers every day, with the heaviest day being Wednesday, I believe, with the FOMC minutes coming out. Of course, you can look all this up. There are hundreds of calendars online, but it's important to see what's ahead of us. As far as what was expected on Friday versus what we actually got, we were opening in a gap lower on Friday. The expectation was for the market to push back into the range, retest value low, and then ultimately end up at the point of control. That did not happen at all. The market instead tested the value low, fell off, and ended up selling off, which was not one of the key scenarios that I listed. The secondary scenario was mostly balanced, and then eventually testing the Thursday low from below, but holding steady in balance. That did not happen either. And then the third scenario is an open test drive up that would likely push into the point of control and ultimately get 26.65 and potentially 27.72 on the week high. We still have a week high up here at 72. I'm keeping an eye on that. But none of those scenarios worked out, and that happens. So this is what we got instead. We opened at 39.50, and we pushed up into value low right here. Almost got to the point of control, and then we fell back off, and we were just not able to get back in. Mid-test and a clean drop into 25.84.50 on the low. Multiple distribution profile. This looks like a double distribution, but it's almost a trend style double distribution. A key number today is right where we're trading. If you recall, we've had this price playing for quite some time, 26.14, then 26.15, and now 26.16, 50 or so. It's the market has come back again and again to this price. Another thing to observe is that we are below the microcomposite profile for this area. So if we look at what we've done since February 2nd, we are trading beneath the midpoint of that range. So the range that we've been stuck in since February 2nd is 28.1275 down to 25.35 and a quarter. The mid of that range, the middle point of that range was tested multiple times. Right there at 26.74. We are under the point of control for this whole area as well. It's looking really weak And of course, the driver here probably is this trade news, this trade war potential that's going on, which I believe is just positioning for negotiation. So the market's is acting nervous, and we're not able to push back up into the upper range of this composite to push higher. So in the bigger picture, you would see a drop from February, a push up, consolidation, higher low, and then the correction, an ABC correction up, and then we start to push into the upper 2700 range and 2800. But so far, it's just been stuck down here. I have a microcomposite from the 22nd of March, from this day forward, and we are just continuing to trade in balance back and forth. We've had multiple neutral days back to back. We've had a neutral day up, then a neutral day down, and so on and so forth. It's been very interesting. So we're in this range, but we are trading with some volatility within the range. All of the metrics for the harmonic rotations, what's a normal harmonic rotation in the ES, and so on, so you can size up your stops. You can size up your stops and so on. Have all expanded. So we're up to, I think, 3.75 as the 3.75 points in the ES as the harmonic rotation. That's up from 2.5, and then it jumped to 3.25 over the February sell-off, and now it's at 3.75. So if you're using, small stops, 6-tick stops, or whatever, you might be experiencing a lot of frustration, because that is well within the noise of this product. It's again swinging at around 3.75 points per rotation as the norm. So that's where we stand on the bigger picture. Here's this is just the profile chart. This is another view of it. You can see very clearly here we gap down, and then we've been completely sideways with a downward skew since then. So we've been channeling down in the ES. I don't believe that the market can sustain these lower prices very long. I believe this is all news driven. I believe as soon as we hear some relief, some sort of agreement or anything on the trade wars, we're going to see a huge up day, 1.5% or plus up day in this product and across the board. So the market's standing by and waiting for some news. There's a lot of risk here for the S&P 500 because we're a global economy. We're very heavily dependent on trade. And anything that interrupts that is going to immediately impact the bottom line, most likely negatively, especially companies like Boeing and the huge multinationals. These are going to be very impacted by what happens with NAFTA, with Europe, with China. This is where we stand. As far as what we're expecting for today, we're opening right in this low volume node. This is the key LVN for the day. My expectations are equal for scenario 1 as they are for scenario 2. We're opening in range. The expectation is for an open in range, and then we rebalance the overnight inventory. We get down to 2604. 2604 is the close, 2604.50, and then we tackle this point of control 2603.50, and then I expect us to hold on and trade in balance here. I'm expecting a fairly balanced profile for the day. I'm expecting us to be stuck in between this range here, 26, 24, 25, down to 2600. We're potentially going to test. We're potentially likely to test this 2600 again, this low volume node that exists there. But overall, that's scenario 1. I'm looking for both sides to be active and for it to be stuck in Friday's range. I'm looking for an inside day today. Secondary scenario is of course the opposite. They're equally able to play out. I'm looking for a push into the 2628 area for a test of the overnight high, and then failure through the low volume node, test the close, test the point of control, and finish somewhere in the middle. This all the same. So we end up with the inverted profile. This is a day where, unless there is news, and that could change things at any moment, this is the type of day where I'm trading from the outside in until the market proves me wrong. And that means I'm looking for extremes. I'm trading from the extremes back in against my stock zones or key areas. I notice here the flex levels aren't popping up. We'll need to readjust that. But I'm trading against whatever areas that I see the market is attempting to breach. As soon as it falls back in after the breach, I'm selling the bid, and I'm looking for it to revert back towards the point of control mid VWAP. Same on the downside. I'm looking for it to breach or attempt and then buy it on failure to continue, lift the bid, and then take it back to VWAP mid point of control. Okay, so that's scenario 2. I'm not expecting much more than that. I don't believe we'll have a runner today unless we get news. I hope that lines you up pretty good for the week. There's not much. I'm not seeing much as far as action on Bookmap. The overnight session is not showing us much in terms of clues. So if we look at the overnight chart, it's very balanced. We've traded basically with an upward skew throughout the Asian and European session. We broke down a little bit, but we are stuck right in the middle here at the point of control, which has moved to 2617, and that's the area of mid and everything else. So there's not much we can garner from the overnight session. So I'll leave you with those thoughts, and I want to remind you, this is the day when you should be coming in with what you intend to target for the week. What is it going to take for you to win this week? And you win the week by winning today. Okay, so what are you working on today? Are you working on your patience, your FOMO, holding winners longer, letting trades play out to their targets because you've seen it happen after you get out, cutting your losses more quickly? Whatever it is, identify what your issues are, because your losses and errors, your errors are your biggest loser. If you cut your errors, chances are you have room for profit. So our quest as traders is to find and eliminate where we're committing errors. Good luck.